Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi, listeners. Welcome to yet another episode of State of the Economy. Commodities. Gold has been in and out of $2,000 an ounce since the beginning of this year. Recent reports suspect dithering on interest rates have given it a big boost. A decline in the dollar and treasury yield have aided the uptrend. The yellow metal has also been impacted by the Red Sea crisis and geopolitical developments in the Middle East. Silver has tended to follow gold, though the prospects for it look good. So, what's really happening on the precious metal front? How will they behave in India? To share his views with us, we have with us Mr. Jatin Trivedi, VP Commodity and Currency Research, LKP Securities. Welcome to Business Lines State of the Economy podcast, sir. Sir, gold has been really, up and down since the beginning of the year. What's really happening in
Yes.
the market?
Thank you for inviting me for this podcast on Business Line. I was looking forward to having this conversation with you. And actually, the gold prices, are showing a little bit of a sideways to, range bound movement as of now. I've not seen gold prices, giving a very good strong trend as of now because it is still waiting for strong triggers, mainly onto the interest rate cycle from the US side, which has not been, finalized as of yet. That what exactly is going to be the time and date, or we should be saying a projection from where it will start to come down and take a U-turn onto the rising interest rate cycle. As of now, it is still on the projections that higher for longer is still prevailing into the sentiments of the US Federal Desk because of the CPI data, not helping out too much of lately since like more than 5 to 6 months. If we see the data of the CPI, that has been range bound and not falling below 3%. So that has been the main reason as of now that the gold prices are also hovering around this $2,000 mark, failing to cross the levels of 2040, 30, 40 levels continuously. Sometimes it is definitely crossing the levels around 2050, but yet again thereafter profit booking is arising. And at the same time, 2000, 1990, 1980, these are the levels where it is taking a good amount of respect and support as well because of the uncertainty on the interest rate cycle as of now. So, till the time there is no such strong indication about the interest rate cycle, whether it is still going to be higher for longer period, or whether we are going to have an interest rate cut cycle going from the month of June or maybe May or June, because March probability has already deteriorated and the prices have shown the reaction uh, at the time when they started to come down from the levels of 2060 to 19 odd zones in the month of February itself, from the start of February that we had seen. So more or less, it is going to be in this line of this range of 2050 to 1980 at max on the lower side. So that is a immediate projection as of now, and this is what the reasonings have been for that.
What are the signals that gold is looking for right now for direction?
Okay, so the main signals, including the CPI data from the US, has to come down definitely. As of now, it is trading in this range of around 3%. But the broader picture, if we look at of the 2 years down the line, from 2021 to 2023, till the time it was, come slowly and gradually started to come down once the interest rate started to see the cycle of upward trajectory. So the broader picture remains onto the lower end for inflation, but this range bound at the lower levels is also considered as a formation of a new leg of lower inflation data to come going ahead. So the broader trend which has been onto the downside of inflation in the last 1.5 years, from especially from the year 2022 to 2023, first half of 2023 calendar year. So that trend will definitely will continue, but from when it is not yet clear because of the higher crude oil prices or the volatile crude prices that we have seen. Also, the agricultural commodities in US have not been supporting completely for the inflation to cool off, because some of the agricultural commodities have also shown some uprising into the market pricing, and they have been not into the downtrend. So that is the main one of the reasons why the inflation data is also not that much comfortably coming down. And since last 4 to 5 months, we have seen this range bound trading session. The prices of sugar also have shown some amount of stability earlier, but sooner the prices start to deteriorate, that will definitely help this inflation data to come down again. That is what the overall structure has to be, because sugar prices in the year 2023, in the month of I think November, saw a good amount of sell off the sugar prices. But off lately, again from December 2023 to currently, the prices have again started to rise a little bit in the US. So that again does not help out. Another set of agricultural commodities which have been affecting this inflation data on the whole has been the cotton prices. The cotton prices again in the US cycle have not seen a strong amount of trend since the last 4 to 5 months. If I projected, I think from the month of November the prices have again started to shoot up. Earlier in the year, first half of 2023, it was a good amount of selling being witnessed into the cotton prices. But then again, later part of 2023, around November, the prices started to scale very strongly on the higher side. So around about 15 percentage almost prices started to trade higher as of now currently from the time of November. So again, these factors have considered into the data before the inflation comes out, and some of these agricultural commodities have not helped the overall sentiment of the inflation data to come down again. So yes, comprising all these things, these agricultural commodities along with crude oil, they need to stabilize at least or come start to cool off, so that the inflation data will also give this indication of coming strongly below 3%, and then the projection will start flowing in where towards the 2.5 to 2.4 or something percentage going ahead.
Sir, at the beginning of the year, gold seemed to be hinging its bet on the US Fed cutting the interest rate, but right now signals are very mixed. So how do you see it?
See, at the beginning of this year, 2024, there was a strong signal about interest rate cuts will be there, definitely from the month of March. That was the overall sentimental viewpoint of the market participants, and the prices were trying to, factor in those points. So later off in the December month, we saw a strong rally into the gold prices from 1980 to around about 2080, 2090, but failed to, hold the levels of around 2075, or even I should say touch the levels of 2100. So that again because that again happened because somehow the CPI data is not supporting the actual anticipation of the market participants. So at the end, the summarization comes up to the data has to be supported, as the Federal Reserve also has been taking its stance that the data has to come in line for them to come down with the interest rate cycle, and take the U turn into the higher interest rate prevailing. So the statements will change once the inflation data comes out, because inflation data coming down in itself will be showing triggers of data, like some of the agricultural commodities which are higher, they will start coming down. The jobless data, they might start a little bit, on the increasing side because of the inflation staying at these levels. Also, the manufacturing data also will start to show the indication of recession. So they do not want that. That is definitely one point which Federal Reserve has been maintaining, that they do not want the recession to come into the markets, into the economy. So definitely that they are not going to let it happen. So longer the interest rate cycle remains at higher elevated levels, there is a fear of a recession hitting as well. So this year definitely in the second half we will see the interest rate cuts, but the market participants wants the interest rate cuts to be a little bit onto the aggressive side and not on a very smaller gradual scale, because we have been seeing this uptrend cycle in the interest rates in more than 1.5 year now. So being a pause period as of now does not, create a panic, but the longer the duration of higher interest rate, that definitely does not help the sentimental, because uh, coming March, they might come out with the statement that still the data is not supportive. So still there needs to be some clear moves. So again, the projection of June that also might get extended too. But hopefully the data are not that much affecting the inflation data because crude oil prices, even though holding at these levels of around 83 into the Brent and 77 into the WTI, max out level is around $85 to $80 in the both Brent and NYMEX respectively. So I'm not looking at inflation getting into the problems because of the crude oil prices. My main concern or my point of tracking this inflation data is mainly on the agricultural commodities in the US, especially how they are shaping up, because that is what is affecting the inflation data as of now. Crude oil prices looks like it is not going to, show a very higher trend right now, and it will start to, be at comfortable levels of around 74, 73 in WTI and around about 78, 79 to the Brent prices. Yeah.
So how do you see the gold prices behaving in India?
In India, see the rupee factor, which previously for a few years, where the rupee was depreciating, definitely was not helping the gold prices to stay lower, and the gold prices were being projected at higher levels, and the same was reflected into the MCX prices and the domestic gold prices because of the rupee depreciation. But last year in 2023, we have seen a little bit of a twist and turn where the rupee prices were very strongly stabilized by the RBI, and the rupee did not affect much to the gold prices. But the COMEX gold onto the projections of higher inflation was getting affected, and along with the geopolitical tensions. So that was not helping the domestic gold prices to stay lower, and we saw a good amount of gold prices, being trending on the higher levels because of the factors of Middle East crisis, the Russia-Ukraine conflict still continued. Uh, the buying sentiment or the hedge funds were very much active for creating a good amount of position into the safe haven metals like gold, silver, and platinum. So these all factors definitely help the COMEX gold to remain at higher levels and keep on testing and breaking the higher levels of around from 1900 odd zones to 2000 levels. So the first half of 2023 was more or less very much onto the sideways to range bound volatile market where the market participants traded between 1800 on the lower end and 2000 on the higher end. That is the first half. But the second half, post I think September, October, there was a strong buying momentum from the 1800 odd levels to 2100 odd zones because of the interest rate cycle will be taking a U-turn in the first quarter of calendar year with respect to the interest rate coming down. So that projection, definitely helped the gold prices into the COMEX, and that the same was reflected into the Indian markets. Now, level specifically speaking for the Indian markets, as of now, according to the current situation of the interest rate cycle, uh, do not see prices, scaling above 63,000 as of now. There needs to be some positive triggers for the same with respect to the interest rate cycle in the US and the global markets as well. And on the lower end, at the same time, 60,000, 60,500 should act as a very strong buffering support for the gold prices as well. So, looking at this situation, I'm looking at gold prices between this 3,000 point of range of more or less 60,000 on the lower end and around about 63,000, 63,500 max out for the gold price in the higher end. Till the time there is no such clarity on the interest rates.
As a consumer, should I buy gold
Hmm.
or wait or sell? And what would be your suggestion if I were an investor in?
At the current levels, it becomes a little bit of a tricky situation. So one needs to be very safe, or one needs to be, being at the right side of the trend. Then one should be keeping or making themselves be on the sidelines as of now. Okay, because this is not a trending market currently in the near term. We might see a strong trend happening into the gold prices once there is some amount of clarity with the respect of interest rate cycles globally. And I think one before we go strongly up, there will be one leg of pullback, which will bring in very strong trend on the higher side. So I would still advise the people to be on the sidelines and have a fruitful, out for the fruitful outcome. One needs to wait for some good amount of corrections. The levels which I would recommend for the investors to watch out for will be around the levels of around 60,000 for their first leg of entry. And if the situation, deteriorates with respect to the interest rate cycle, it stays higher for longer than first quarter, and projection still remains that the interest rate will be higher, then we can definitely, look at 58,000 as well onto the lower end, because Comex Gold will start falling below 1950, 1940 and start its journey towards the 1900, 1880 odd zones again. So one needs to be taking a watchful eye on these developments happening globally. Also, the Middle East crisis, if they start to escalate further, then definitely that projection will not let gold prices fall way beyond measures below 1800 as well. So some factors are definitely helping the gold prices, and some factors are not helping. But as of now, currently, one needs to wait for some corrections. As I said, 60,000 looks a very good level for entering into the prices. And if one needs to be very safe and wants a good amount of safeguarding investment into the gold prices, I would suggest sovereign gold bonds provides a good amount of safeguards, because 2.5% returns on this bond prices in Indian markets. This that definitely helps you to buffer up the any minor correction into the gold prices. So that one thing can be done in a SIP manner, not at one go, because sovereign gold bond is a uh, issue which comes out regularly. So instead of doing a bulk buying into the bond, one can allocate a different amount of allocation into the sovereign gold bond and take the benefit of 2.5% annually.
What is your outlook for silver?
Okay, silver outlook remains very strongly onto the positive side. There are a couple of reasons because of which I am a little bit more bullish than the gold prices into the silver prices, including domestic market and the global market. Firstly, the base metal cycle looks it can be coming out of this range bound trading session where we have seen the copper, zinc, and aluminum prices being very much onto the sidelines because of the Chinese market and Chinese economy not doing well. So the second half of 2023 saw a strong amount of weakness into the Chinese market because of the real estate market not doing well, and the investment cycle into the Chinese market was also falling down. So definitely that was not helping the base metal sentiment, as the largest economy of consumer of base metal and the energy, that is the crude oil, was not showing good amount of signs. So base metal market looks very much positive from here on. More or less 5-7% downside may be considered into the prices, but not more than that. And higher side projections remains open for the base metal prices of around 10 to 15% in the first half itself. I think since towards going towards June, July, we will see the prices, taking higher levels of around 7 to 8% at least from here on into the copper, zinc, aluminum prices. So projecting that positivity into the base metal, silver will definitely take the advantage of that base metal trend, and silver will show good amount of rally towards the $25 mark, which is almost 8 to 10%. So I'm looking at projections of around 8 to 10% going towards June, July 2024. That is the first half of calendar year. And the second half will again provide the support for the silver prices, because of the gold prices being will go trading higher because of the interest rate cycle. Projections will definitely clear out, and we will see projections of lower interest rates, and that will help the gold prices, and uh, along with it, the silver prices will take the benefit of the bullions as well. So I think first half, because of base metals, silver prices will be on the higher side, and on the second half of calendar year, because of the gold prices, silver prices should remain at the higher levels. So as I said, $25 mark is the first level of point for me on silver in COMEX, and on MCX, I'm looking at the levels of around about 75 to 76,000, even maybe 77,000 on bull case scenario as well for the silver prices. So this is the first half projection, and on second half, with the anticipation of interest rate cycle, we can counter towards the levels of around 80 to 85,000 as well. So that's the projection for the silver prices in our domestic and global prices as well.
Thank you, Mr. Jatin. It's been really helpful and very insightful to that here. Thank you very much.
It's my pleasure, Mr. Subramaniam. Looking forward for another rounds of podcast with you guys.